and welcome to another Monster Candle Trader video. Today we'll be reviewing the previous strategy that I uploaded on the channel predicting the higher the low of the day in London and writing out a trade in the intended direction into New York for high pips trade off. Now I'm feeling a bit under the weather, so if I sound off on this video, I really do apologize. So first things first, in regards to this model, is to take advantage of what the trend is on the higher time frame, which we're looking at the daily. And as we can see here, it is in a bullish trend. And even though liquidity has been swept here, we're not looking for any kind of reversals because on the higher trends, until there's like a break in market structure, we don't look to predict the higher or the low. We wait until the structure is formed and then we go from there. All right, so on the previous video, I introduced the idea of using the ICT information to predict the higher or the low of the day. And with information like that, on first stumbling upon that information, it might seem too good to be true. So I was thinking to myself, what if something is too good to be true, it's often isn't. So what is the downsides to this strategy? And today's video is going to be showing why it still works despite the downside, right? So we're predicting that it's a bullish trend. So all trades that we're going to be viewing we're going to be doing some back testing from last week into this week. We'll be seeking higher prices, right? And if you pay attention here at the kill zone, which is at 3 a.m., we were seeking higher prices. And of course, we're looking for a shift in market structure. And then we can use one of the many PDRAs that ICT has given us to actually enter into a trade. So right here, we see here, the market went shift above this structure. But when I'm trading the London model, I tend to wait on a shift in structure after the kill zone, not before it, so that I can get better entries, right? So I don't end up in any kind of fake out, right? So the market shifted structure here. But as you can see, no gaps were created. So if it's the case that I was going to look to take this trade, I would have used this breaker right here to actually take the trade. The market continued lower, created here, and shifted structure again here, created a gap, right? And if you pay attention here, so created a gap here for an FEG, right? And then immediately closed below it. Now, period, you'd actually be looking for a retracement, right? And for a 330 retracement, what you're looking for is another sweep in market structure, which took place here. The buy side here was taken. Furthermore, the buy side here was also taken. The market ran lower and it collapsed into 4 a.m., which would be the end of the trading session using my model. So this day would basically be a null, a non-trading day, right? So a neutral trading day. So it's pretty much a skip, which is good. One of my biggest issue in general as a trader is that I tend to look for trades and overshoot myself on days that aren't trading days. So if you're able to like stick to the model and realize that this is not a trading day, this would have been a skip. So far, so good, right? Now we're going to be moving. And if you realize that the low of the day here that was formed here, the lowest point formed here was actually broken in the future when the market came down here. So this is one of the days in which the market failed to continue lower despite it being a bullish day. So this would have been either if you've been hasty and enter into the trade early and not follow the specific strategy that I laid out, you would have taken a loss, or it would have just been a day that you skipped, right? So let's go ahead and take a look at the second day, which is Tuesday the 11th of March. And what you see here is that between 2 a.m. and 2 and 5, between those time frame, the low of the day was formed. If you pay attention here, for the entirety of this day, the market did not go below this area, and this was formed on Tuesday. Now, using the strategy, how would we take part in this trade? It's the same thing. 3 o'clock, we're looking for a shift in market structure. Right here, right? So we were looking for a shift in market structure. The shift took place here above the swing high. Now, in regards to these kinds of trades, there's two methods you can take, right? You can either wait patiently, right, for the market to come and trade back below here after making this initial run, right? Or you can use a breaker setup if you feel like you're unable to catch the trade. And I think the last breaker would have been here, right? So this would have been the breaker. So once the market traded above here, you'd have used here as the breaker. And if you pay attention, let me go and just highlight the breaker for you. This is the breaker that I'm talking about. So it's the last swing high before liquidity was taken to the sell side. So this right here would have been the breaker. Let me go ahead and do it here. So this would have been the breaker. Let me just do it in a box format so it shows better on the chart. Right? So, and then I'll just change the color of this. I'll remove this for now. So this would be the breaker, right? Get a better color. There we go. And this would be the breaker. The market trades above it and then trade back into it. And then if you pay attention here, the low of this FVG, right? So the lower portion of this FVG right here, let's make it white. And then we'll extend the color here. And this can be white as well, right? So if you realize that the low of the breaker matches with the low of this FVG, which means that if you're looking to take this trade, of course, you'd have used here. And then for breaker setups, I like if it's the case where the market is looking to go higher, ideally you want to see only the upper portion of the breaker traded to. So my stops would have been somewhere around here. But it could be the case that the market wanted to trade back down into this one last time, then take off. If that's the case, there's two options. You can either have your stops something like here, right, which is below the actual breaking part of this FEG, right? And then have your stops below here, and then or you can enter the trade here again, normally with your with your stops below the midpoint of the breaker, right? For me, I like to aim for like 2 pips for London. So something like this probably would have been the case, given that this FEG is here for me as well. Or I would have kind of played it safe and just put it below the midpoint of the breaker, right? Now, it all just depends on your trading strategy. What I would recommend is just to use here, right? So even though the stop is a lot bigger, you know that if this run fails, you just call it a day. And of course, you aim for, on these kind of days, you want to aim for the previous day's high. Or if you're being conservative, you just aim for 40 pips, right? Because in London, it's typically 20 pips, 20 pips. If it's like a high liquidity flow day, so aiming for 40 pips isn't bad, which would have given you a 1 to 9 on this day, which is really, really good. But for me, as I mentioned before, I like to squeeze the market. So I would have probably used a method which I enter aggressively here on the top of the breaker, or I would have entered on this FVG here, right? And then my stops would have been here. Entered here, and then my stops would have been actually here, right? Or just at 2 pips are here, right? And then I'll aim for 40 pips or the previous day's high. It really depends, right? I think going conservative, getting a pretty much a 1 to 20, 1 to 22 is pretty good. And then if it's the case where the market comes and fails, and like want to tap into this, right? Once it enters into here, I'll just do another market entry, and my stops would be below here. So this would have been the second trade, right? And if it's the case that this trade fails, then, right, then I would just call it so 1 to 40. Then I would just call it for the day. That would be my way of doing it, which is entering aggressively, being prepared to possibly take a loss. So this is like a 1 to 14, which is also good. And as I did last time, in context, if you're risking something like $20, you're looking at $240. If you're risking something like 50, you know what I'm saying, right? So this is for Tuesday. Let's go ahead and take a look at Wednesday, right? And for Wednesday, the low of the day was also formed. We're going to go ahead and take a quick look here, right? So waiting for a shift, FEG here. This one is very, very, very transparent when it comes to forming out the FEG right here. It's very obvious, very to the face. Market structure shift right here. FEG after the 3 a.m. kill zone, and the market ran higher for the rest of the day. And of course, you'd be aiming for 40 pips for this day as well. From here, aiming for 40 pips, right? So this would have been another amazing day. And then for Thursday would have the market. So if you pay attention here at 3, right? 3, we're looking for a shift in market structure. Which happened here. So we'll probably be waiting for the market to return back here, and then it traded and stop us all. But because this is the you're waiting on the 330 retracement here, which took out the sell side here, there is an opportunity to, depending on your risk model, if you're just looking to take one risk and be loss and be out, you'd have called it for the day when you've taken a loss up here. But then after the 330 retracement, you're looking for another shift, right? And so there is a shift in market structure when the market trade above this swing high. And then, of course, you want to use this FEG here. And there's also this FEG sitting here, right? So you'd pretty much want to use this as an entry. This is the candle that shifted structure. I like to use that. The market trade into it once. Now, here is the thing when it comes to this particular trade. And as I mentioned before, this is like an open model. With trading, you can always attach your personality onto it. If it's the case where, so this is a 1 to 1.4, because to take into consideration this FEG, stretching it to 2 isn't a bad idea, right? Now, this is in London, right? So 330, we're looking to, that's a 1 to 6 right there. That's 12 pips. And this is a 1 to 8, 1 to 9, and not quite the 1. So you're getting a little bit less than 20 pips out of this move, right? And then the market came and took us out. So while the low of the day wasn't formed here, there was a trade to be had right here, right? So if it's the case where you took a loss here, you re-entered here and the market went up here, you can just recoup the loss and leave the trade at hit as it is in regards to aiming for higher prices. So this, even though the strategy didn't form here, it's not the case where it couldn't be like a break even or even a profitable day, depending on if you like to take partials, right? Because if the market runs giving you like a 1 to 10 in regards to our run, I believe that was here, or like a 1 to 8. If you have taken a loss, you can take the partials off. If you just like to take partials, this could be like a non-loss day for you. And then of course Friday, the between 2 and 5, the low of the day was informed in Friday, and then for 3 o'clock, right, there is like a news at 3, so you'd want to wait until 30 minutes later either way to look for a trade. So you're looking for a retracement where liquidity is swept. As you can see, liquidity was swept here from the retracement. Market structure shift, right? FEG here, and then this failed right here at 347. So you can either call it a day or just look for a second attempt, which you would have found here. But then again, it's Friday. So this is it. I have for this week as well. Monday didn't have a, the low of the day was informed. Monday it actually failed, as you can see. Where is it? No, actually it was Monday. The low of the day was formed Monday. Tuesday is the one that failed, right? So the market didn't from here on for Tuesday. But Tuesday, you still got, there was an opportunity to get pretty much a clean 1 to 20. So as I mentioned before, if you're the type to take partials, or you're the type to play it safe and then like you hold with after you secured yourself some profit already, then this would work perfectly for you. The reason why I wanted to do this is specifically looking at this week. The idea is, right, if say that you have $500 in your account, right? In this case, you'd be pretty much up over 100% already in the market, and you can pretty much just chill for the rest of the week. So this is what I'm saying. I'm not saying you're going to go in there and predict every day. I'm saying that you can go in there, take advantage of this strategy if you're able to predict the overall trend of the day, and just take full advantage of it and go for it. So this is a longer video, more of showing the mindset that I have behind these models and what I'm looking to apply in video for you guys in the future. I think next week I'll start doing back the videos in regards to the trades that I'm taking, so you'll be able to see the strategy in action. And that's it, and that's pretty much it. So again, thank you so much for watching. Like and subscribe if you like the video. Take care.